Welcome to Mantis, where we dive into Bitcoin cycles, market structure, and long-term analysis. Quick note before we start, nothing on this channel is financial advice. I'm an analyst and a builder. Mantis is a cycle analysis tool. What you do with your own money is your decision, not mine. Right then, let me describe a fortnight to you. Over 1,000 Bitcoin walks out of hardware wallets that were supposed to be the gold standard. The AI trade, and the one that ate every headline for 8 months, comes apart. A big leveraged fund goes to the wall and somebody buys the wreckage at the bottom. Quantum computing scare stories do the rounds again. And the one piece of legislation everybody was waiting on quietly runs out of road. That is about as bad a fortnight as this asset gets handed. Now look at the chart. It's still on the line. The 200-week average. Same place it started. That's the whole video, really. But stay with me, because how it held is the interesting part. Start with the one that actually hurt people, because it deserves better than a headline. Coldcard is a Bitcoin hardware wallet, not the biggest, but a serious one, the kind bought by people who take self-custody properly, air-gapped, open source, the grown-up choice. Back in 2021, a build error slipped into the firmware. When the device generated your seed words, it wasn't reaching for the proper hardware randomness. It was falling back on a much weaker software substitute. And that matters, because randomness is the entire security model. Your 24 words are only safe if nobody can guess them. Weaken the randomness, and you don't need to steal anyone's device. You just need to work out which seeds were possible, offline, on your own machine, in your own time, and then check which of them have Bitcoin sitting on them. That's exactly what happened. 5 years the bug sat there. At the end of July, somebody swept the lot, well over 1,000 Bitcoin, tens of millions of dollars, thousands of addresses, and here's the part that stings. Most of those coins hadn't moved in years. This wasn't people getting fished. This was long-term holders doing everything they were told to do. So who was fine? Anyone who added a passphrase on top of their seed, anyone who rolled their own dice at setup, anyone on multi-sig, in other words, the belt and braces crowd, the people who did the extra step that everybody tells you is optional. It isn't optional. That's the lesson, and it cost other people a lot of money to teach it. One more thing, and it's important. Updating your firmware does not fix a seed that was already generated badly. If yours came off an affected device, that seed is compromised. New seed, fresh firmware, move the coins. Go and check the official advisory, not a thread now. Within about a day, the theory arrived that this was an inside job, cooked up to frighten people off self-custody and into the big ETFs. I don't buy it, and neither should you. The code is open source. The bug is 5 years old. The company found it, admitted it, apologized and shipped a fix, which is precisely what a conspiracy doesn't do. Software has bugs, sometimes catastrophic ones. That's a worse story than a plot, because you can't vote it out. Does it make the ETF look easier this week? Of course it does. That's an observation, not a motive. Meanwhile, outside our little world, the AI trade has rolled over. Properly, the big semiconductor names are in confirmed downtrends now. Lower highs, and the violent bounces are traps rather than turns. Some very large portfolios have been handed life-changing losses in the wrong direction. And here's the detail I can't stop looking at. Some of the biggest, safest, most institutionally owned technology companies on Earth are now swinging 15 or 20% in a fortnight. That used to be our embarrassment, the thing people pointed at to explain why Bitcoin wasn't serious. Now it's Microsoft's problem too. I gently suggest that says less about Bitcoin getting wilder and rather more about what happens to any asset when a story it was priced on stops being believed. Trade the trend. Don't marry the narrative. So, all that, landing at once. And Bitcoin sat on its 200-week average and didn't do very much at all. Let me put that in proportion, because it's easy to miss when you're watching it tick. We are roughly half off the October high. That's a real bear market, not a dip, not a shakeout, a proper one. And through the ugliest news flow of the whole decline, the line that has caught every major Bitcoin bottom in history is still underneath us. I want to be careful here, because this is the bit where people start selling you certainty. Holding an average is not a bottom. It's not a signal, it's not a promise. Higher time frame, this is still a bear trend. We are still making lower highs, and that hasn't changed. What it is information. When an asset gets handed a fortnight like that and refuses to break, you learn something about who's left holding it. And if it does break, the next shelf down is the 300-week average, somewhere around 55,000. I'm not frightened of that number. If we get there in this window, that isn't the thesis failing. That's the thesis arriving at a discount. Right. Washington. The Clarity Act is the big one, the bill that finally draws the line between what's a security and what's a commodity and lets the serious institutional money in without its lawyers having a fit. It's through the House. The Senate text is basically agreed, and it is going nowhere because the calendar has run out. Recess, then a short window, then everyone starts campaigning instead of legislating. The obvious reaction is disappointment. Everyone was waiting on this. Here's the less obvious one, and it's the take I'd actually defend. Think about how the ETFs played out. The market spent a year and a half pricing them in. By the time they landed, the anticipation had done a great deal of the work already. Now imagine Clarity had sailed through in the spring. It arrives into a market that's already leaning, already long, already positioned for it. Good news lands on a crowd that's expecting good news. You know how that usually goes. Now imagine instead it turns up in 2027, after the bear has finished doing what bears do. After the leverage has been cleaned out, the tourists have gone home, and everybody who was going to give up has given up. Same law. Completely different fuel. Catalysts do their best work when nobody's waiting for them. Delay isn't automatically a loss. Sometimes it's just a better entry for the whole market. Which brings us to the appointment. Same one as always. Same one that's pinned. June's weekly cycle low, called and confirmed at 57.8k. Ahead of us, the 4-year low. Window open now, running through March. Optimal zone, late October. And I'm keeping October deliberately because that's what the last 3 cycles did. Not 2, 3. When the same interval keeps turning up to within about a week, you respect it until it lets you down in public. Now here's the forward-looking bit, and it's the one I'd write down. After the 4-year low, the next weekly cycle low is due somewhere out in the new year. If that low prints higher than the one before it. That's it. That's the signal. That's not a bounce or a relief rally or hopium. A higher low on the weekly cycle is how a bull market announces itself. It's how every single one of them has started. So that's the sequence I'm watching. 4-year low in the window, then a higher low behind it. Get those 2 in that order, and the argument is over. And if we sail through March without a low that fits, then the model was wrong in public on a chart with my name on it. You won't have to ask me about it. So, state of Bitcoin, a fortnight that took a swing at the self-custody crowd, the AI trade, the leveraged funds, and the legislative timetable. All at once. And it's still sitting on the same line it was sitting on before. That's not a rocket. Nobody's getting rich this week. But there's a difference between an asset that's going up and an asset that won't go down. And right now we've got the second one, while almost everything else is having a considerably worse time. Get your self-custody straight, passphrase or dice or multi-sig. Do the extra step. This month is what optional looks like when it goes wrong. Watch the 200-week, watch 55,000 under it and keep the appointment. Windows open, optimal zone, late October. Then we want a higher low behind it, not financial advice. Do your own research, only ever with money you've written off. So step back, set your alerts, let the cycles do the work.